the crypto secret you've been looking for on how to read the markets. We are going to look at Fantom, which we've been following for quite a few months, and it's following textbook chart patterns if you know this secret. And what is the secret? It is Elliott waves. Yes, it's so powerful. I'm going to show you how we projected certain price movements well ahead of time where you should have been able to plan your profit taking and your entry position. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. We're only used to focus on currencies, but now exclusive on crypto. So let's dive straight in. So we've done a few videos on Fantom. So this first one, this was back in October 9th. It says, Fantom has gone parabolic. Are you feeling the FOMO, fear of missing out? This is where most people lose money. So what we saw with Fantom back in October, and we'll see this with many markets. So it's not just Fantom. We just saw this parabolic move. Like, look at this move. But it broke down into a five-wave sequence, which is the five-wave secret. Markets move in fives and threes. If you can spot the fives, then all of a sudden you have an edge. So what we said with Fantom was because of this movement here, 1, 2, 3, 4, and then a 5 of this movement to the upside, all of a sudden it hits particular zones where it's likely to do a correction. Right? That is important. Right? So this was in October, right? Go back and watch the video, October 9th, back in 2021, what was that, 6 months ago. So then we did a follow-up video, and it was just bang on, like bang on. Now this is in January 2022. January 2022, you can see the date here, how to take profits at 100x, sell at the top, don't give your hard-earned profits back to the market. And what I say in this video is where most people lose. Most people see these kind of moves to the upside and just continue to think it's going to continuously go up and up and up and up. Well, I go, look, you have to understand the psychology of buying and selling and what drives the price movements. It's supply and demand. And if you just think of it logically, buying behavior, more people buying than selling is what's driving the price up. But eventually that money's going to run out and people are going to take profits. So a textbook, wave 4, is a profit-taking wave, right? So here we got this macro movements that we drew ahead of time. Look at this, 1, 2, this is a macro picture now. There's 3 that we saw. At this stage here, when there's certain price ratios hit, what's most common is a wave 4. And we labeled it a wave 4 here. And we said it ahead of time. You know, we said it back in October. We said, look, October is looking like we are hitting a wave 3 top. You can see this really, really clearly over here, a wave 3 top. You want to be aware of this, whether it's Dogecoin, Bitcoin, Fantom, a smaller market cap coin. You want to be aware of these buying and selling behaviors so then you know when you should be taking profits. So now this was then a good trade setup as a wave 4, because after a wave 4 comes a wave 5. And typically this is the range. There's Fibonacci ratios and everything else that are really, really important, really, really powerful that you want to know about, because each of these waves have a relationship to each other. Yeah, that's right. Yeah, this wave 3 and this wave 4, they have a relationship to each other. You want to be aware of those relationships. So then we did another video. This is back in February 3rd. And look what happened. Look at this. So what we said here, let's just draw this out. And I want you to be aware of this because, you know, sometimes I do a video in hindsight to kind of look at textbook chart patterns, but then many are in foresight. This is highly probable what's going to happen next. Doesn't mean it's guaranteed. It's probabilities, never certainties. But here, it's just perfect. Like, look at this. So we said, look, typical wave 5, that's what we're looking for. That's what's highly likely, highly probable. We looked at momentum, we looked at pattern, and we also looked at price ratios. And then look what happened over here. Bam, this over here, this arrow that I'm drawing over here is this part here. This is the wave 4. What we're referring to is just obviously slightly different. And this is what happened over here. So we had this amazing price movement to the upside. This is what we're talking about. This was it. Bang. Right? So we projected this top, boom, and then we projected this bottom, getting ready for this top. And then in this video, we said, right, now expect a big correction. After a really big, what I'm drawing here, a 1, 2, 3, 4, 5 of a 1, you should expect a big correction. And what we said with this line over here was we're talking about end of May. End of May, and it sounded ridiculous. It sounded absurd, especially seeing all this buying behavior with Fantom. But you need to understand that most of the market movements are not based on utility. They are based on speculation. Whether it's the stock markets, whether it's the currency markets, whether it's commodities like gold, or whether it's crypto, and especially crypto. The psychology is more raw. It's probably the best market to use Elliott Wave and Fibonacci ratios. So what we're going to do now is we're going to now go up to date. So look at this data. This is what we drew here. And just to be really, really aware of this, we said it's likely to correct not only by the end of May, that's what we should be waiting for as a minimum, but look at these price ratios. And we drew this red line, and the red line was, what does it say? It's like $100. It says 70, is that 78 cents? 72. Yeah, 72 cents. In that range, 72 cents. That's what it says over here. So now, let's just go to a live chart, and look at this. Oh my God, I mean, come on. Come on. You know, probabilities never certainties, but this is just textbook. 1, 2, 3, 4, 5. I remember a lot of you asking me questions about, does this really look like the top? I go, look, man, we just have to go with the probability, and we should anticipate a correction. And look, it's tagged this 78.6%, which is just exactly what we was anticipating. So now we're going to do an update. And by the way, if you're brand new to Elliott Wave and Fibonacci, you have to absolutely take my Fibonacci and Elliott Wave Masterclass, because I cover the 3 key rules that you must know that allow you to read the markets, and it will give you a massive edge. I promise you, you'll absolutely love it, because it's just next level. Most people don't understand that the market psychology is represented in the price. So if you click on the link below, you'll be taken to this page and you'll get instant access. Elliott Wave and Fibonacci Masterclass, How to Read the Market Like a Pro, hosted by myself. I've been doing this for over 15 years in the currency markets, but now cryptocurrency for over 5 years. And you'll just see an exclusive, see what you can learn from this extraordinary training. That's my team writing extraordinary training. But we've also got great feedback as well. What you'll learn, let the unknown become the known. A secret crypto model offers minimum volatility and maximum trust. Learn when to enter and exit trades to maximize your profits. How to use Fibonacci and Elliott Wave theory to make more objective, high probability decisions. How to make money within the crypto market without any volatility. There's a few different things over here that you're going to learn. And it's what we've seen with Fantom, right? So what we're going to finish up on today is to look at, okay, where are we now with this price movement? We've had this textbook. Like, it doesn't get much better. Look at this, 1, 2, then a 1, 2, 3, 4, 5 over 3. So there's this very clean movement to the upside of a wave 3. We've had a really clean wave 4, which didn't trade into the range of wave 1. That confirms it's a 4. We projected in advance it's likely to do one more surge to the upside. That's going to more than likely, more often than not, exceed the previous high, but not by much. And it did that. And then we saw this is likely to be a high from a price perspective and a pattern perspective. And we looked at momentum as well. Say, look, we should be looking to take profits. It was actually here. It did one more last surge. And then, boom, look at this profit taking all the way down, all the way down, all the way down. So what you want to understand is a few things. Firstly, after a wave 1 is a wave 2. A wave 2 is simply a retest of the beginning of wave 1. And the most common ratio is 78.6%. And we drew this ahead of time. Right? You can go back and watch the video. This video was on February 3rd, which is what? 3 months ago. 3 months ago. 3 months ago. Like ahead of time. Right? And look, to be totally honest, I was expecting it to be a bit more of a cleaner A, B, C kind of structure. That's most common. But the markets are not perfect. They're not going to, it's just mass herd psychology. And we're just looking at the psychological mood of the people that are betting on the price. So what we're looking at now is not the cleanest of corrections. Like, there's no real clear 3-wave structure. That's just the nature of the markets. However, it has hit price. So we know it's hit the typical maximum wave 2. and it's coming close to the minimum time that a correction takes. So we want to be aware of this zone now. Very, very aware of this. Are we seeing the end of a wave 2? So I like to keep things really, really simple. Now, because we haven't hit that minimum time, we're going to look at two things. One, I'm just going to pop out of this chart and pop into the chart in the top left. This is a weekly chart. And what I want to look at is the momentum. Now, can you see? I'm going to draw it like this. Momentum indicators just literally measure the momentum, the rhythm of the market. It's a lagging indicator, meaning it's taking past information and just giving us the averages. But what I'm looking for, so you're really, really clear on this, is the saying, the trend is your friend, ride it until its end, until it reaches its bend. I'm looking for this low. Does it marry up with the indicator? And you can see that it marries up. When this blue line crosses over here, you can see the movement to the upside and the movement's been to the upside. This one here is more of a local one, and it marries up here. And we are getting into that zone again. So we want to be aware we might be coming close to a low being made. Now, momentum by itself is not strong enough. Not strong enough. Whether it's moving averages, this is a stochastics RSI. There's a few quite good ones. I like the stochastics RSI because it's very visual. Very visual. It's not good enough by itself, but it's extra information that can add an extra probability, an extra edge when combined with pattern. If it combines with pattern and price, and sometimes you get all three, and sometimes you get 2 out of the 3, and we're looking for probabilities. So now let's just jump back into the daily chart. So we go, okay, momentum looks like we should be looking, potentially coming towards some type of reversal at some point soon. So we want to be aware of that. So we go back to the daily chart, top right. What would confirm for us that this is the end of the trend? Now, the obvious one, I'm just actually going to clean this up as well. I'm just going to, because we've exceeded these two, I'm just going to get rid of that one, and I'm going to get rid of this one. The real one that we want to pay attention to is this line over here. There's a few things. The obvious one is the price exceeding the former swing high, which is this price here. Right? The former swing highs before this was this one, then this one, and then this one. Right? So this is the local swing high. Now with Fantom, I don't know if you want to wait that long because that's quite far away from the price movement as well. So if you want to be a bit more aggressive, you can go for a local swing high over here. So what I like to do is look for some type of confirmation, a signal that tells us with probability that the price has reached the low and that is likely to hold. Then wait for some type of pullback and then look to enter on the break above the next swing high with a stop loss on the new swing low. Right? That's high probability, because if you just try and catch a falling knife, I like to say, down here, we might see further downward movement. So it's best to wait for a clear signal that tells us, okay, doesn't mean it's guaranteed, it's just highly probable. So is there anything else I want to cover with you today? Yeah, so the pattern's not that clear on the downside, but it's hit price, it's coming close to time. We've got momentum as well. What should we anticipate? Let's just finish on this. What should we anticipate with Fantom in the second half of 2022? Right? Is it worth looking at? Right? So let's just assume for a second. I don't like to assume, but let's just say we got a clear signal, and let's just say it was at this point, and we're happy with it, and it's looking like, let's just say this, eventually this wave 2 gets exceeded, this swing high, gets exceeded, and we're happy to say this looks like it's likely to hold as a wave 2 low. Where is the next price zone that Fantom is likely to get to? Because remember, the markets are always expanding and contracting. Expanding and contracting. Well, what typically comes after a wave 2? Well, the secret is, if you've got the ability to count to 5, you can do this. You can do this. So it's 1, 2. Well, what comes next is a wave 3. But what you want to be aware of is where is the typical ratio zones of a typical wave 3, the most common, highly probable wave 3 zone, which you can then look at in advance and go, is this worth my time? Whether you're holding Fantom, you're looking to buy Fantom, or you're looking to sell your current Fantom, you have more information. Now, I cover this in depth in the free Elliott Wave and Fibonacci Masterclass, how to do a wave 3. But I'm just going to show you how powerful this is. And you'll see this time and time again. In fact, I'm going to do it on the side over here. I'm just going to show you the lines, as in how you're going to see some horizontal lines. Make an assumption down here. There's a key ratio. There's a few of them, but the key one that you want to be aware of, if I can get that again. Oh, that disappeared. Let's just get this again. All right, we don't need these ones. It's the golden mean called 1.618. Right, there's a few others as well, but this is one of the key ones you want to be aware of. It's likely, if we do see a wave 2 low, I think it's still going to be a few more weeks. But in the second half of this year, we're likely to see Fantom do this. Probably exceed it, but this is like the typical minimum wave 3. And this is $6. You know, $6. Well, that's nearly a 10x from today's price. 10x from today's price. Is it ready to reverse? Again, if you're investing, if you're trading this, the best guidance is to wait for the signal and then wait for the first pullback. But remember, if you go back to the video, there's many of you holding Fantom and trading Fantom. I think it was this one here, where I said in this video, I think the title was "Attention Fantom Holders, What to Expect as the Crypto Market is in Fear," like literally fear. Because there was this massive FOMO, this move here to the upside, and here I was saying, look, if you haven't already, get risk-free as a minimum, take profits. What I found is even experienced traders are just terrible at taking profits. No trading plan, no objectivity, and you need to have a trading plan. Just some series of bullet point objective points of when you're going to take profits, especially when you can see these typical high probability patterns unfold. So the price with Fantom is expect some type of reversal in the coming weeks, and then the likelihood of exceeding $6 is pretty high. But I reckon in the second half of this year, we'll see more than likely, not guaranteed, more than likely, if the markets unfold as anticipated. If I can draw this, come on, let me click. There we go. We'll see the price more than likely exceed this high. That'll be our first absolute confirmation of this low. This will be our first massive signal of the low. And then the price of $6, I've got $6.05, give or take. But that's the range. I reckon it will probably break $7 at some point in the near future. Strong project and everything else. But I'm just looking at it from a technical standpoint. Fibonacci, Elliott Wave. So you want to learn how to do this, how to be ahead of the market, how to have the winner's mindset, how to have tools that most people don't have. Click in the link below. You'll get instant access to my Elliott Wave Fibonacci Masterclass. I'm telling you, you'll absolutely love it because it gives you an edge and you'll be able to see things that people don't normally see when it comes to the market. So if you like today's content, like, subscribe, hit the bell notification. Let's finish on a quote. I'm going to go with chapter 5. Let's go with chapter 5 today. Chapter 5. Yeah, I think I read this a few days ago, but I like this one. Because, this is not the quote, but another quote is, repetition is the mother of all skill. And it's purposeful practice. So it's not just repetition. It's purposeful repetition where you're looking for feedback to really, really make progress. But this one is Leonardo da Vinci. Simplicity is the ultimate sophistication. And you're looking for something that's simple, where you can repeat, you can record, and it's just simple. Simple as possible, but no simpler. And that's why I love what I teach in the masterclass. We're looking at really pattern and price. But the pattern is 5-wave sequences with a wave structure with 3-wave corrections, right? And you'll see those unfold. And then those Fibonacci price zones. And if you can understand the relationships of the buying and selling behavior, oh my Lord, the edge that you have with your decision abilities, like being able to make decisions on probabilities, is next level. So take the masterclass, enjoy it, and I'll see you soon.